Hello, welcome to another edition of Mortgage Clarity. And today we're going to talk about what's going on with interest rates in the market and how is this going to have an impact on possibly home values and purchase activity. So if you haven't been watching the market as of this video here, April 8th, 2022, interest rates have been making a very strong move upwards since the beginning of the year. And in fact, let's go ahead. I'm going to share my screen to a live chart here. So this here, what you're looking at is the 10-year U.S. Treasury. Now, this is not the same thing as a mortgage-backed security, but it reflects in a chart kind of what's going on in the market. And you'll see here since about January of this year, which already was a little bit higher from November, but really starting about March, we've seen rates and stuff just really take off and climb. And when you look at rates just 18 months ago, they were probably low threes to high twos, and today we're probably looking at rates in the high fours to low fives to give you a sense of what kind of movement we've seen. So how does this impact people who are looking to buy? Well, obviously, home values continue to be strong, continue to go up. So when you have rising prices and rising rates, it does make the affordability more and more of an issue. And it's something for some people might mean if they were looking at the top end of their affordability, they're going to have to start lowering their price points to offset that. So that is something, of course, to consider. But does this mean then with rates going up so much that we should expect home values to drop? And if you're actively out there looking to buy a home, should you hold off? So I'm just going to give you my personal opinion and why I think no, I don't think home values are going to drop, and I don't think that it's a good idea to wait for rates to drop. I do think rates go lower in the future here, but I wouldn't wait for that. And again, let's go over this really quickly. So why do I think values will not drop even though rates have gone up so much? Rates going up will definitely pull people out of the market, for sure. However, there's such a low inventory level compared to buyers and sellers that even if we lost half of the buyers, we still have more buyers for the homes that are available. I think the last stat I saw nationwide was about 820,000 homes on the market, which is way below the norm of probably about 1 point, or actually about almost 2 million. So there's very little inventory here. So in addition to that, while we will lose buyers because of higher rates, I think we also lose some sellers because of higher rates. So that just, again, keeps that supply and demand ratio such that home values likely will continue to go up and buyers will be in competitive market situations. And so if you think that homes values will drop because of this, I think you're going to be on the sideline and it's going to end up costing you because the value will go up. Because sellers who have nice low rates right now, or potential sellers, might decide that, you know what, I don't want to give up my 3% rate to go buy a home. There's not much to choose from already because once they sell, they become a buyer and it's a difficult situation. And if I do, I'm almost doubling my interest rate, or I'm adding 1 or 2% to my rate. And so I think that's going to actually, again, pull sellers out of the market just like buyers, and you're going to be left with the same dynamic of not enough homes. So now, why did I say that values going up and rates going up? If you can qualify for a loan, why do I recommend buying today? If I do think that in a year and a half, year to 2 years, we'll see rates come back down. And I'll tell you that. Now, why do I think rates will come down really quickly? Because I think that once the inflation stabilizes and starts to decline back to normal, right now inflation is running almost 8%. And if you're lending money at a fixed rate, inflation at that high rate erodes your earning power. So you're actually losing money because by the time you get paid back the money, you can't buy as much with it because things went up in price. So that's part of why rates are going up. So I do think that as we see inflation come down in the future, rates will respond to that, but I wouldn't wait for it. And here's why. Again, I mentioned, I think home values go up. So if you can buy a house today, I think it will be cheaper than a year or 2 years from now. And if I'm correct and that rates come down, if you buy today, even though the rates are high, in the future when the rates come down, you can do the refinance at that point and get the lower rate while still having locked in today's pricing. And if I'm wrong and rates do not come down but continue to go up, then while rates look high today, a year from now they might look low, in which case then you'll be happy that you bought at a lower price and a lower rate than what the future would offer. And just take a look, my clients that, just 6 months ago that thought rates were higher from where they were a year ago, kind of complaining, oh, rates have gone up. Well, they wish they could go back and get those rates from 6 months ago, but the past is the past and moving forward. So there you have it. That's what's going on in the market. We definitely are seeing rates go up, but I do not think that the rates are going to actually have that much of an impact. It might slow things down a bit, but slowing down does not the same thing as going reverse. So we may not see quite as rapid appreciation. You might have a little bit less competition. So instead of 5 people putting an offer on a place, maybe it's 2, but it's still going to be competition. And so that's kind of how I see the market going. If you have any questions, let me know. If you like this video, please like it, please share it. That's how other people learn about this. And again, until next time, have a great day.